Good day and welcome to our session today. In today's talk, we will explore how to maintain a calm and steady income stream from interest-bearing assets. We often think of retirement as either risky investments or passive waiting. Yet, there is a gentle middle path: steady, reliable interest and bond-type instruments. This is not about chasing high returns nor frantic trading. It's about preserving capital and enjoying quiet financial peace. First, let's invite yourself to imagine your later years as a tranquil garden. In that garden, you have a reliable small fountain of interest earnings. It doesn't gush wildly, but it flows steadily, offering comfort and calm. We want that steady fountain, not a torrent or a drip. So today we'll focus on interest-bearing assets, such as savings, bonds, and conservative instruments. We'll keep financial jargon minimal and focus on meaning and mindset. You don't need to be a market wizard to benefit from calm finances. You just need consistency, awareness, and gentle discipline. Let's begin with the core concept. What is an interest-bearing asset? An interest-bearing asset yields a set return or income over time through interest payments. For example, a savings deposit, a certificate of deposit, or a government or corporate bond. When you invest in such an asset, you lend your money, and you receive interest in return. It's like planting a tree and receiving shade and fruit over time, rather than swinging in storms. In the current environment, interest rates have risen compared to a few years ago. Many bond yields now offer returns in the 4% to 5% range in the U.S. context. Note: local markets may differ. This means there are possibilities for reasonably reliable income without taking large risks. But remember, higher yields often came with more risk, so we choose the more secure side. What does risk mean here? Mainly two types: the risk of losing principal and the risk of failing to receive interest as promised. In our calm approach, we emphasize preserving principal and avoiding undue surprises. Let's look at how interest-bearing assets help with retirement income. First, they offer predictable cash flow. You receive interest regularly and you know broadly how much. This predictability helps you budget, plan, and enjoy your life without anxiety. Second, they are usually less volatile than stocks or real estate. In turbulent markets, stocks may swing dramatically, but interest-bearing assets often move more quietly. Third, they allow you to sleep better at night knowing the investment isn't chasing a miracle. Now, how do you incorporate them into your portfolio with a peaceful mindset? Here are some guiding steps. 1. Allocate a portion of your savings to interest-bearing assets. 2. Diversify among reliable issuers, governments, high-quality corporates, banks you trust. 3. Ladder maturities so you're not locked in all at once when rates change. 4. Monitor but don't obsess. Check once or twice a year unless major events happen. Let's unpack each step gently. Allocation. You might decide that, say, 30 to 50% of your safe capital is in interest assets. You still keep other assets for growth or other purposes, but this chunk is your peaceful base. Diversification. Think of it like planting different kinds of trees rather than one oak alone. If one issuer falters, you still have others standing tall. Laddering maturities. Imagine you have bonds or deposits maturing at different times. So if rates go up or down, you're not stuck with all your capital at the worst moment. Monitoring but not obsessing. You want awareness, not anxiety. Twice a year check-in is enough unless radical changes occur. Now, a few current trends worth knowing quietly. Yields on many government bonds are remaining in a 4 to 5% band in 2025, which provides a positive backdrop. One analyst noted that it is very possible that U.S. Treasury yields remain in a broad 4 to 5% range in 2025. This suggests the opportunity for reliable returns without major gambles. Another report points out that bonds may offer unique opportunities in the second half of 2025 for income-seeking investors. So while markets may be uncertain, interest-bearing assets are gaining a calmer spotlight. But we also must remain aware, interest-bearing does not mean zero risk. Bond prices can fall when interest rates rise. That means if you simultaneously hold long-dated assets, you could see fluctuations. In our CALM strategy, we emphasize shorter to medium maturities and quality issuers. Let's consider a real-life example. Imagine Mr. Lee has saved Korean 500 million won and decides to allocate 200 million won into high-quality bonds or fixed deposits. He chooses to ladder them. 50 million won matures each year for 4 years. Then reinvests at then current rates. His comfort comes from knowing each year he can reassess and choose what to do next. This gives him flexibility, protection, and a modest steady income. Meanwhile, he keeps the other 300 million won in a mix of growth assets and emergency savings. So his retirement finances feels like a gentle river rather than a white water ride. Now, it's important to keep the mindset right. Interest-bearing assets don't make you wealthy overnight, but they help you stay wealthy quietly. You're not betting on a fortune, you're nurturing a stable life. In life we call that the silent steadiness approach. Think of the proverb, slow and steady wins the race. This means consistent small steps often serve you better than wild leaps. So let's summarize key takeaways. Interest-bearing assets are a way to generate calm income. They are less volatile, more predictable, and help you relax about finances. To use them well, allocate a portion, diversify issuers, ladder maturities, monitor lightly. Stay aware of current yield conditions but avoid reacting to every headline. Keep the mindset of calm, consistency, and long-term orientation. Finally, some practical next steps for you to act on this week. Step 1. Review your savings and interest-bearing assets and note what portion they represent. Step 2. Identify one new good issuer you'd be comfortable with and consider investing a modest amount. Step 3. Plan a ladder maturity setup. Schedule at least one new placement every year for the next 3 to 4 years. Step 4. Mark in your calendar a review date 6 months ahead to check progress. Step 5. Write down your personal income goal from these assets. What annual interest you'd like to receive quietly. Remember, action builds comfort. Even small steps give that steady stream. To conclude, I'd like to leave you with one more proverb: a watched pot never boils. In other words, constant fiddling and worry often spoil the calm growth you'd prefer. So tend your financial garden. Water it gently. Enjoy the view. But don't stare at every leaf trembling. Thank you for joining this calm session today. I hope you feel more confident about using interest-bearing assets to support your retirement. May you cultivate that gentle fountain of income and enjoy the shade of financial peace. Until next time, take care and let your finances breathe quietly and steadily.